Online now. People will take a couple of minutes to join. We'll pause for maybe a minute and then we'll start formally, sir.
Okay. You can see my screen?
Yes, sir. This is visible.
Okay.
Namaskar and a very good evening to one and all. I, CA Deepak Chopra, Chairman Direct Tax Committee of Karnataka State Chartered Accountant Association, welcome you all to today's session on 43B Clause H of Income Tax Act. 43B Clause H is present days perhaps the most deliberated and debated provision under the Income Tax Act. It is a provision with mass impact, impacting all businesses and professionals, and also having huge monetary implications. This is a must know provision for all tax professionals, business owners, and decision makers. To demystify the provisions of this section, we have with us today CA Shri Sumit Khurana, sir. Sir, on behalf of entire team KCA, a hearty welcome to you, sir.
Thank you.
Before I hand over the proceedings to sir, it is my duty to introduce the speaker to the audience. Now, it is the mandate of the speaker to keep his introduction very brief. CA Sumit Khurana is handling tax matters for last 22 years. His main areas of work is litigation involving representation before ITAT. A student at heart, an academician by thoughts, and a practitioner by action sums up the introduction of CA Sumit Khurana. Following the mandate and keeping the introduction very short, I once again welcome you, sir, and hand over the proceedings to you. Over to you, sir.
Thank you so much. Good evening, everybody. And thank you, KSCA and Deepak ji, for having me here. So, as you said, the topic is very important for all the participants. We'll straight away proceed to the presentation. While I'm sure all the participants would have read this section hundreds or thousands of times, but for the sake of completeness, I wish to just quickly run through the ingredients of section 43B which are relevant for today's presentation. It starts with the non-obstante clause. It says notwithstanding anything contained in any of the provision of this act. A deduction which is otherwise allowable then goes to series of clauses and says it shall be allowed in the previous year in which the amount is actually paid. The clause relevant to us is in the middle of the presentation, which is any sum payable by the SSE to a micro or small enterprise beyond the time limit specified in section 15 of the MSME Act. So if there's a payment due to MSM micro or small enterprise and the due is it's beyond the time limit specified in section 15 and it is not paid by the 31st March of the relevant previous year, then it is to be allowed in the year in which the payment is actually made. This is coupled with the proviso to the section, which typically says that if you make the relevant payment before the due date of return of income, it still will be considered as allowable within the relevant previous year. Now, here, if you can see in the red font, there is an exception for clause H, and the clause H is the clause which is relevant for payment to MSMEs, micro and small enterprises. So, as far as a payment due to micro or small enterprise, even if the payment is made on 1st April, subject to certain other elements we'll see in a while, the benefit of the proviso, which gives you a window to claim the deduction if the payment is from 1st April to the due date of return, is not available for this clause. Now, quickly running through what is a micro enterprise and what is a small enterprise, this section simply says please refer to the relevant statute, which is MSME Act. And if you go through the relevant definition of the MSME Act, it ultimately draws down to from section 2 definition, it takes us to section 7 relevant clauses. Read with the relevant notification, the sum and substances for for an enterprise to be a micro enterprise, it has to predominantly meet two conditions. Its turnover is less than 5 crores and its investment in the plant and machinery is less than 1 crores or up to 1 crores. For small enterprise, the turnover is up to 50 crores and investment in plant and machine is up to 10 crores. So effectively, what we've seen is for the disallowance to happen, there should be a deduction otherwise allowable. There should be liability towards these micro or small enterprises, and it should be unpaid beyond the time limit specified in section 15. So, understanding it with the help of an illustration, take a case in the first of the table before you. Suppose the date of supply is 20th February 2024. Without going into the nuances as to how I have calculated the due date of payment as of now, the second column, let's assume due date of payment is 6th April 2024. So 6th April 2024, assuming the facts of the case say this is the date by which I should have made the payment. So if I make the payment on 1st April, which is outside my current previous year, for the relevant previous year, whether I would suffer a disallowance. Now, as I said that the extended time from 1st April to the due date of return is not available for the payment due to micro and small enterprises. But the important thing to note is, first of all, we have to see what is the due date first for the making the payment. The due date itself is 6th April. So the payment, if made up to 6th April, will not result into disallowance. So this payment will be allowable in the financial year 23-24. That's the first row. Second example, second row. Suppose the date of supply is 2nd February, supply of goods or the relevant services which entitle a micro or small enterprise for the payment, and the due date of payment is 28th March. Now, due date falls within the relevant previous year, and in such case, if I make the payment up to 31st March, it is allowable within that fiscal year. The payment, if made on 1st April, will be allowed in the next financial year, which is 24-25 financial year. So if you note the contrast in first and second both illustrations, the actual date of payment is 1st April, while in the first case we are able to claim deduction within the same financial year because it is within the permissible due date under section 15 of the MSME Act, which we will dive down a little deep in a short while. But given the fact that it is within the due date as per section 15 of the MSME Act, even though payment date is 1st April, it is allowable in the relevant fiscal year. Now, take an extreme case, third scenario, where the date of supply is 2nd February, due date of payment is 28th March. If I make payment up to 31st March, which is though beyond the due date, but since I'm making the payment within the fiscal year, there is nothing payable as of the last of the year. 43B inherently doesn't apply. So therefore, this will also be allowable within the same fiscal year. Sorry. So this is to just to give an overview of how broadly the provisions work. I'm sure all of you would be aware of this, but only for the sake of completeness, I thought of capturing this in a simple illustration. Now, some of the elements of the MSME Act which may not be very critical for us to know, but important, or rather, I would say that it's good to know. The investment criteria, for example, there's a notification issued under the relevant statute, which is how the investment should be examined and calculated, and that says that it should be the statistics should be picked up from the immediately preceding year's income tax return. And if the income tax return of there is no ITR filed for that relevant year or the due date is not set over, then the self declaration, it may be the first years of operation, then the self declaration would be the factor to be considered for considering how much the investment, whether the investment criteria is met or not. Now, for plant and machinery, they say how to understand the word plant and machinery. It is the same definition which is followed in the income tax rules. And for computing the quantum of plant and machinery, the GST will be excluded. So, for considering how much of investment is in the plant and machinery, the GST component of the invoice on the purchase of plant and machinery has to be excluded for that. And the certain items which are specified in the section 7 of the MSME Act, which are not to be considered for the plant and machinery. Proceeding to about the turnover criteria, the export turnover is not factored for considering whether the turnover exceeds the threshold or not. And again, for the purpose of registration, the turnover of the preceding year is to be considered. The items which are excluded from the investment criteria typically are pollution control equipment, R&D equipment, safety, industrial safety devices, etc. Not going to run into details of these things, but just capture this for your later references if required. Now, the most important element in this whole discussion is Section 15, because ultimately Section 43B of the Income Tax Act says if the payment is beyond the time specified in Section 15 of the MSME Act, that is where the disallowance really operates. So it is important for us to absorb in a little more closely as to what are the ingredients of Section 15 of the MSME Act. So if we take a look at the section here, it says where any supplier supplies goods or renders services to any buyer, the buyer shall make payment thereof on or before the agreed date. So the first condition is if the buyer and seller have agreed upon a date and the agreement is in writing, then the payment should happen either on that date or before that date. In a case where there is no agreement, or if at all agreement is not in writing, then the section says it should be before the appointed date. So, unlike the first clause, which says on or before the agreed date, in the absence of an agreement, the clause is before the appointed date, not on or before the appointed date. So, what is appointed date? We'll see in a while. But continuing with the rest of the section, even if there is an agreement about a particular due date of payment, that agreement cannot exceed 45 days. Or, in other words, if the agreement to make a payment says that, okay, I have purchased goods on 1st of April, I give you three months credit or 2 months credit. You can make payment after 60 days, 90 days. That agreement will still not hold good because the section has capped the total time limit available to 45 days from the date of acceptance or deemed acceptance. Acceptance is when you receive the goods or the when the services are rendered. So deemed acceptance is also to be understood in the same sense for the sake of simplicity. So if I receive goods on day one, I have up to maximum 45 days from that within which I have to make the payment so as to be compliant with section 15. That is when I have agreed upon a particular period. Now, as we said, there are two elements in the section. One is depending upon whether there is agreement. If there is no agreement, we have to go by appointed day. So the payment has to be made before the appointed day. So it is important for us to understand what is appointed day. Appointed day is defined to mean the day which follows immediately after the expiry of 15 days. So it's a day after 15 days, and the 15 days run from the date of acceptance of the goods or services. So the two elements to be noted here is the appointed day is a day after the period of 15 days, and 15 days run from the date of acceptance of goods and services. Now, applying this in a particular fact pattern, let's take a look at the illustration. Say there is a company which bought goods from a enterprise on 30th March 2024, and they have orally agreed upon a period of 30 days for payment. If you see what is the maximum date by which the company has to make a payment in terms of section 15. Now, we have already seen that in the absence of a written credit period, the default credit period terms is that it should be made, payment should be made before the appointed date. Now, in this illustration, we have seen that there is no written agreement about payment terms, about the credit terms. So, the default term will apply, which is appointed date. Appointed date, we have seen that it is 15 days from the next following date of the day next following the 15 days from the date of acceptance. No, if the goods have been purchased on 30th March, that becomes the date of acceptance. If we calculate appointed day, 15 days from 30th March, 30th March, 31st March, 2 days, and 13 days following that, total 15 days will land up to 30th April, 13th April. The question here arises is, do we start counting our 15 days period from the date of 30th March by including 30th March, and we land up to a appointed date of 13th April or 15 days from 13th April, or do we start counting from 31st March and thereby we land up calculating 15 days ending on 14th April? Now I'll take a pause here. I would want some reaction from the audience to see as to what does audience believe, that whether 30th March, which is the date of delivery or the date of acceptance, is to be counted for computing 15 days period or not. So Deepak ji, can we get some reaction by, maybe somebody wants to share in the chat box or somebody want to raise hand and unmute them?
So, sir, there are a lot of answers being put on the chat box. 30th March to
Okay.
be counted is what? Uh, it's flowing too fast for me to read.
Okay.
Vintage G says 13th April. There's a lot of 14th March. There's a lot
So
of
the
support for
majority is supposed to be
14th. Yeah, appears to be
suggesting
so.
14th April. So I have no choice but to go for the go along with the majority, right? So the reason, I don't know if somebody has stated on the chat box, the reason of excluding the date of delivery is flowing from the section 9 of the General Clauses Act, which says that when a period has to be counted from a particular date, then the usage of the word from indicates that the starting day has to be excluded. The first day in the series has to be excluded. So that's the reason for which we are not counting 30th March as the date within the 15 days period. Now we have computed 15 days period, and the appointed date is 1 day in addition to that, because the appointed date definition is a day following the date of 15 days period. So we come to 15th April as the appointed day. Now, if I make a payment on 15th April, I have a outstanding on 31st March. My due date, as computed under Section 15 of the MSME Act, comes to 15th April, and I make the payment of 15th April. Things should be fine, right? I should get the deduction within the fiscal year March 24. I hope there is no disagreement on that. I should get the deduction.
But the payment has to be before the appointed date, is what you led us through in the previous lecture.
Very correct. So thanks for that quick response, Deepak ji. As you rightly said, this section says the 50, section 15 says, in case of appointed date, it is not on or before. It has to be before the date. So therefore, the date of the relevant date for me to make the payment, so as to be compliant with 43B, comes back to 14th April. That is circuitous way of drafting this section, but that is how it is. So if I make the payment on 14th April, that should be okay. On or before that, I should get the deduction within the same fiscal year. Now, assuming that 14th April is Sunday, we all know that it's a common fact that the General Clause Act Section 10, in cases where the public holidays on the due date of payment, we get a date after that which is eligible for making any necessary legal compliances. Now, taking a case where we have an agreed credit period. In this illustration, the company has bought goods from a micro enterprise on 1st September, and the two enterprises agree that there should be a 30 days from the date of delivery, including the date of delivery. Now, the two parties contractually agree that my due date of payment has to be counted in a particular fashion. The date of delivery will be counted for completing 30 days. The question arises, whether this kind of a contract is enforceable like that, or I have to be governed by this, or as the section 9 of the General Clauses Act says that you can exclude that day, I'll be permitted to exclude that day. Now, so hypothetical illustration, and please don't get too influenced by the September month. We can take it to be March month to be more relevant for 43B. Now, here I will not take too much time. I think the answer is very straightforward. It's a contractual terms between two parties. It is not a section in any act which we are interpreting. If you are interpreting any central legislation, then Section 9 of the General Clauses Act helps us as to how to compute. But in a private contract between the two parties, the Section 9 or any section of the General Clauses Act has no operation, and therefore their terms will be understood as per their own internal agreement. Now, taking another case, suppose there is a entity who buys services from a small enterprise, and the appointed date for payment is 30th March. The the recipient of the services hands over the check dated prior to this date, prior to the appointed date or due date, but he hands over after that. And the uh, company deposits, the recipient company deposits that in the bank on 1st April. So whether 43B allowance will be triggered here. Which date is relevant for me to consider, whether the date of check, whether the date which I hand over the check, whether the date on which the actually that recipient entity gets credited, the amount gets credited by bank transfer, when the check is actually in cash or cleared, which is the relevant date here. I'll just take a pause here. Maybe any reactions from the audience? I know these are very relatively simple illustrations to start with, just to gear up, and as we warm up, we will move to a little more complex situations in this front.
So Gurudaji says date of handover of check, receipt date, check date. Most of them are going with the check date, sir.
Check
Whereas
date.
Dinesh was saying date of credit, date of check handover is also quite a popular answer in the audience.
Okay. Okay. So it is very helpful because only we have divergent views, it the discussion becomes a little more meaningful. Okay, so the the law on this proposition, the way it has emerged is like this. The Negotiable Instruments Act, it says that a check is negotiable by delivery. So the moment the check is delivered, subject to a condition that is ultimately honored, the date of delivery of the check is equivalent to the date of payment of the check. Two conditions. One, it should ultimately get honored. Second condition is it should not be a post dated check, because if on 31st March I give a check which is dated 15th of April, that will not tantamount to payment as on that day. It will tantamount to payment on the date of the date on the check, which is the post later day, subsequent date. So this is the proposition which is broadly settled by the courts also. So taking the discussion forward, suppose a check is sent by post before the appointed date, but it gets delivered to the recipient after the appointed date. If I am handing over the check physically, this answer is a little simple. We have already seen that, and these are the some judgments also which say that check itself is a form of payment. Encashment is not the date of payment. Encashment does not necessarily tantamount to payment. Encashment is a subsequent condition attached, unless if the check is unless the check is honored later, there's no problem. Okay, if the check gets dishonored, then only there is a problem. Suppose the check is honored later, date of handing over the check is enough. And not only in other contexts, in the context of section 43B itself, it has been held that as far as the payer is concerned, He has done his part of giving handing over the check. Now a recipient takes his own time to get it in cash and submit in the bank. That cannot result into any unfavorable consequence for the payer. So given these propositions, if we come back to our question that if check is posted prior to the due date appointed date, but it gets delivered after that, where do we stand? Can we get some reactions on this? Whether date of posting is relevant or the date of receipt is relevant by the recipient.
Date of delivery, date of receipt, date of posting. We have all possible answers here on the chat
All
box.
possible answers. Okay. So, uh, what the
Majority are
law?
of date of receipt here.
Sorry,
But the majority are of the opinion that it should be the date of receipt.
date of receipt. Now, both are right actually. The first proposition is that the in by default the post office works as an agent of the sender, which means if I am handing over a check to the postal authority or even the courier agency, he is acting as my agent. It is still remaining with me. It gets when the recipient actually receives the check. That's the time of payment, or that's the time of delivery to him. However, if the recipient has communicated to me that you send these checks by post, or as a matter of regular trade practice, it is understood that checks will be posted, which is again nowadays not very common because we are most of us are doing electronic transactions. But just for the sake of completeness, if that is the kind of thing, or either the practice or a communication can be established, then it can be said that the moment I hand over the check to the postal authority or the courier agency, that time payment is complete from my end, subject to it being actually being received and the check not getting dishonored. Now, coming back to the important element of our appointed date, there it says 15 days from the date of acceptance. So it becomes important for us to appreciate what is the date of acceptance. Date of acceptance has been defined to mean under the section 2b of the MSME Act, the day of actual delivery of goods or rendition of services. Now, there are a lot of problems in ascertaining date of acceptance in the case of services, which we will deal with in due course of time. But for the time being, we can confine ourselves to goods, wherein the delivery of goods itself is date of acceptance. The condition attached is only one thing. If the buyer raises any objection in the writing about the goods or services, and that objection is made within 15 days from the delivery of goods or rendition of services, then appointed date or the date of acceptance becomes the date on which the objection is removed by the supplier. So there is delivery of goods or rendition of services. Within 15 days from that, an objection is made by the buyer about quality, quantity, whatever to the seller, vendor. Then the date of acceptance gets deferred till the date objection is removed by the supplier. Now, objective is to make sure that there is no obligation to pay in case of defective or damaged goods. That's predominantly the obligation. But I'm hearing that people are trying to use this to overcome the clutches of Section 43B. We'll see in a short while as how people are using, and maybe deliberate on whether this is a sustainable model or not. No, taking all these things into consideration, if we see what is the possibility of time limit applicable to for the non applicability of Section 43B, things look like this. The starting point is the date of delivery of goods or services, and that is the day one of the activity which is to be excluded, as we have seen in the because of General Clause Act. Now, if there is a credit period agreed in writing, we have seen that it cannot exceed more than 45 days. So if there's a agreed credit period up to maximum 45 days, we have to make the payment so as to be within the compliance norms of section 43b. If there is nothing agreed in writing, we have seen that it is 15 days plus 1 day, which again comes back to 15th day only, because we have to make payment before that period. If the objection is raised about the goods or services within 15 days, then till the objection is removed, there is a window open for withholding the payment. And then if there is a payment by check, then with the mutual understanding, maybe the because the life of the check is 3 months, after that a fresh check has to be issued. The time period for encashment or actual outflow of the money can probably maximum be had to 3 months. Now, the very interesting proposition here is, if I say that a buyer raises an objection or makes an objection, in what form he has to make an objection? Is the communication of objection being talked about? Because if you see the language of the section, it says objection is made. Does it mean objection is communicated? It's the date of communication relevant? It's quite obvious that unless you communicate this thing to the vendor, how will he even address that? So communication is definitely an implicit thing therein. But whether this 15 days period will also apply to terminal point of communication, I make an objection today. Maybe within 14 days, I write an objection letter, and that is delivered to him after 15 days. Whether that is still within the compliance, you may feel that everybody is today using emails, so we'll send an email within 15 days. It will be received within the by the recipient in a matter of seconds. Predominantly, yes, but even otherwise, in a physical paper, the my understanding of the law is it's the communication which has to be complete within 15 days. If you're posting physical letters, uh, uh, or you want to demonstrate at later point of time that you have posted a letter, posting it on the last day will not be of help. You have to have proof that you have posted it, within the time limit, so that it reaches the vendor within the 15 days period. While not very critical for our scope of the discussion today, but important to know the connected provisions of the MSME Act. Section 16 of the Act of MSME Act talks about interest on delayed payments. So, if the payment is not made within the due dates or the time period prescribed in the Section 15, then the buyer has also an obligation to pay interest thereon. And Section 23 of the said Act says that notwithstanding income tax law, that interest has to be disallowed. And Section 22 says that this whatever principal amount payable, whatever is the interest amount payable, or with or without principal, even if the principal is paid, interest is outstanding, all these amounts have to be disclosed in the audited accounts, if at all there is any law applicable to the entity which requires that entity to get its accounts annually audited. So this is what section 16 basically reads. I'm not going to spend too much time on this. It says that if you don't make payment within the due date of section 15, then irrespective of whatever your agreements may say, you have to pay a compounded interest, monthly compounding interest, which is thrice the notified bank rate. Now, very small illustration as to how to compute interest in a situation like this, where, for example, your due date was in a particular date, your maybe acceptance of goods is on December 22, and your payment was being made on May 23, and intervening period there is a change of interest rate. Would you pay the interest as per the interest rate prevailing on the date of payment? Would you pay interest which is prevailing as on the date of when the payment was due, or would you pay interest at the applicable rate which was prevailing on the date of acceptance of goods? So the There is judgment dealing with this, which is rendered in the context of the relevant law, that which says that you will pay fluctuating interest rates. So right from the day when your interest obligation starts, prevailing rate during that period, whenever the rate changes from that date onwards, the higher rate or lower rate, as the case may be. One may have a question in its mind that, can the two parties contractually negotiate and modify the interest rate, or say that no interest should be paid? But if we see this section, it clearly says irrespective of anything contained in the agreement. So, notwithstanding your agreement, the interest is an obligation. The real question is, if your vendor says do not pay me interest, and you say okay, I am not creating a provision for interest because my recipient has waived me of that obligation. There is no interest deduction claimed, there is no dissonance happening, nothing happening. He later comes on that I had though agreed to you, but the as per the relevant law, I am not supposed to have a contract to the contrary, or in other words, a contrary contract has no significance. You pay me interest. Will he succeed in the court? Yes. We will have to pay him interest then, and the deduction will not be available to us. That's the sum and substance of the impact of the relevant provisions. Now, he cannot definitely waive his rights of section 16, that is clearly written in section 16 itself. Section 16 dealing with interest says, notwithstanding your contract, you have to pay interest or you are entitled to receive interest. Similar language is not there in section 15. Section 15, which deals with due date of payment, does not say notwithstanding your contract. Can we say that section 15 obligation can be overridden by a contrary contract, which means the two parties can agree upon and say, no, it doesn't matter what section 15 of the MSME Act says, you make me payment after these dates, and therefore disallowance will not operate. Can we have that kind of a contract? Can we have that kind of argument possible by contrasting section 15 and section 16? Is it possible?
So there's one view in the chat box which says that when there is a written agreement for payment, say 60 days, this
Hmm.
agreement is governed by law of contract.
Hmm.
Now, this section coming into play is not MSME Act overriding the law of contract. In
Hmm.
other words, is it not contrary between the two laws?
Therefore, there is a contradiction. We are saying there is a contradiction, but the question is which one will prevail?
Ganesh Murthy ji says section 15 to the 23 will override the Contract Act.
So there is by and large consensus that it is not possible to waive off these things. Even if we ignore this for the time being, section 43B simply says either you follow the fifth section 15 time limit, and even if you alter section 15 time limit, it does not alter section 15. You're altering your contractual arrangement of making payment. The time specified in section 15 continues to remain what is there. So therefore 43B disallowance cannot be avoided by this thing. And also another clue in that very section itself is, which says that your agreement cannot exceed beyond 45 days, is mentioned in the section itself. So therefore there is no scope of having any kind of private arrangement to overcome the clutches of section 15 and section 43B of the Income Tax Act. Now, these we have just quickly already covered, that section 23, it says interest will not be allowed, and section 22 obliging one to make disclosure in the financial statements of the uh, interest and principal due. Now, quickly now going to various issues which arise in this context. So I have some illustrations, to take you through in various situations how this section will apply. But before we get into some practical illustrations, I just want to spend few minutes on overall scheme of the law as to some fundamental questions we should answer first. The first question I have in my mind is, Is the assessee required to independently apply the provisions of the MSME Act and examine whether a particular vendor meets the criteria of being a micro or small enterprise? Or he can simply ask for a confirmation from the vendor asking whether at all you are micro or small enterprise, or he should ask simply registration certificate. If at all he has to make these inquiries, at what point of time should he make these inquiries? As and when he's purchasing goods by the end of the year, it's a continuous process throughout the year. Hmm? Just because my vendor has not given me certificate, can I assume that he is not a micro or small? I ask my vendor to give me certificate. He does not respond. Or he says I don't have a certificate. And later on it is discovered that he had a certificate, or he has just not responded, but he is a micro or small enterprise. What is my position in this kind of situation? Or if at all he gives me a registration certificate, is it really binding on me, or is there a scope that I can still say no, 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 this payment, if I am not making within the so-called section 15 time limit, I should still not suffer disallowance? Is there a possibility like that? Can I challenge the correctness of the certificate? And if at all I can challenge the correctness of the certificate, can I simply challenge before tax authorities, or do I need to get the certificate nullified by applying through national board under the MSME Act or some other authority under the MSME Act? So these are some of the fundamental questions I have in my mind. If at all any of the participant wants to share thoughts on any of these elements, as far as maybe,
There
is
are
it my
multiple
ethical obligation?
So Gurudaji says onus is on the vendor to disclose. Arun Kumar ji
Bonus
says
is
it's.
vendor disclosed. Okay.
Then there's one more comment. If the supplier is not responding, then MSME is not applicable. But the proof should be with the vendor.
Proof should be with the vendor or
Should be
buyer?
the buyer. I guess that is
Buyer.
sufficient.
Okay. Okay. So buyer
And
should have a proof that
he's made an attempt to communicate.
he's made an attempt to communicate. In invoice, it should be declared. Okay. So by and large, the sense I'm getting is the responsibility of the taxpayer is very limited. He's supposed to make a reasonable effort to find out whether the vendor, whether the supplier, seller is a micro or small enterprise. Ideally, as somebody had put in the chat box, ideally the supplier or vendor should in his invoice mention his registration number as a micro or small enterprise, so that the buyer is communicated by that means. In a extreme case, yes, that's what I'm saying. In the seller invoice should contain that reference. So in an extreme case, I should be in a position to argue and succeed that it is in the seller's own interest to take advantage of a legislation beneficial to him. The micro and small medium enterprise legislation is for the benefit and upliftment of these enterprises. And there is an office memorandum issued by the authorities to say that they ideally should capture their information in their letterheads or the invoices, so that the buyers are well aware of their status, and so that the buyer can comply with the relevant law. So if the seller is not vigilant about his rights, the buyer has no obligation. That's one extreme possibility. But preferably, what we should do is the buyer should make some effort by writing, asking, inquiring about the status. And if there is a communication of the status, the buyer should ideally comply with that. If there is no communication, then till the time there is no communication, the buyer should be held not liable for any disallowance. And then, if at all there is a certificate, maybe at a later point of time we'll deal with that. Whether we can go contrary to the certificate, that's a separate question. We'll deal a little later. Deepakji, any comments in the chat box which need to be addressed as of now?
There are a bunch of queries, sir. I'm noting them down separately. I think Q&A can be taken up separately at the end.
Fair enough. Fair enough. So take a case. There's a company retailer limited. It buys some goods from the distributor limited for a particular sum of amount on say 1st January. The entire sum is outstanding as on 31st March. So around 90 days have elapsed. Would 43 be disallowance attracted in this case? It is a fact given that distributor limited, which is the seller, has given me a certificate which is testifying the fact that he's a micro enterprise. Can we have a situation here where the disallowance will not operate? Is there a possibility of this kind in this context? Any comments?
Disallowance not applicable as he is not a manufacturer. No
Perfect.
disallowance.
I think the most of the participants have already crossed these stages. So yes, what the section says is that there should be micro or small enterprise. If we go by the definition of enterprise, it is an entity which either manufactures or produces goods, or it provides or renders services. So a trader is not falling within the definition of word enterprise. So it is not enterprise, cannot be micro or small enterprise. That's the sum and substance. The point was as to then how come this fellow is having a certificate. So this fellow may have a certificate because to extend some benefits, the certificate was provision of certificate was extended to some wholesaler and retail traders, and the certificate would typically carry a description like this that he's in trading. Therefore, by just because there's a certificate, that's not the end of the story. The certificate tells us its character of a trader, and trader we know is outside the definition of enterprise, and therefore it's not a micro or small enterprise for that purpose. Another illustration: this company Diligent Limited procures security services worth 5 lakhs from small safety services, and their services are procured in December 23, but the balance is still payable as on 31st March. This entity, Small and Safety Enterprises, meets the turnover and threshold criteria, but has not taken any registration under the MSME Act. So if it is meeting the criteria, but it's still not taken a registration at all, whether I am still bound by 43B disallowance, or 43B disallowance will operate only and only when that fellow gets registered and communicates to me. So as the first question was, it is my obligation to examine his status on an independent basis, or it is he supposed to communicate to me. That's one way of looking at things. Maybe there can be other angles of looking at things, but the fact of the matter is he's entitled but not holding a certificate. He has not taken pains to get himself registered.
No disallowance is what Rajesh Kumar ji says. Lalit Kumar says no. No disallowance.
So I think we can maybe skip the complex part of it, because there is largely, this issue I think is straightforward, that it cannot operate as a, unless somebody in this audience is believing that there is to be disallowance. Deepak, if you can see any contrary thoughts on this, if there are contrary thoughts, maybe we'll deal with that.
There is agreement, sir.
There's largely agreement. So
Yes,
we'll
sir.
skip that because there's a detailed technical analysis. Ultimate conclusion remains the same. So I'm not getting into the detailed technical analysis for the time being. Maybe if need be, we can revisit this thing. There is an illustration here that goods or services have been procured. Say, let's say this company Thora Limited procures goods and services worth rupees 5 lakhs from small enterprise, which were procured in December 23, and the amount remains payable till March. This entity meets the criteria and is qualified but takes registration at a later point of time. It is not registered on the date of transacting with me, it is registered later. So here again, I believe there will be largely a consensus, but for the sake of completeness, we can take just half a minute pause and say, So I can see there are conflicting views coming up on this. Some people believe that disallowance will happen, and some people are believing that disallowance will not operate. See, the one thing probably we can fall back on is, I think there can be two things which we can look at it here. The fundamental thing is, as a person, a taxpayer who is obliged to comply with Section 43B, what can be expected from him? Now, legislature, while making law, they could have exactly told me what is expected from me. The section doesn't say, the regulation rules do not say how am I supposed to ensure compliance. It is left to me. Therefore, what I'm supposed to do as a taxpayer is to make some reasonable efforts in making the compliance. Now, that is one element. So, therefore, if on the date of transaction I'm inquiring from him whether he's registered or not, and he's telling me he's not registered, that should be end of the story. That is one way of looking at things. Then the person, his right, the seller's right against me to recover money, it arises because he is sold the goods to me or provided service to me, and as on that date he is not holding registration. So therefore his subsequent conduct of holding registration should not impact this transaction. That's another element. Then we have this judgment of Supreme Court, slightly on a different note, but yes, what it says is the benefits of MSME Act are applicable to the entity from the date of registration onwards, and you cannot take benefit of this for the past transactions prior to the date of your registration. Again, some judgments also in the same footing saying that you cannot have retrospective application of the registration to enforce it to get interest or benefit of other benefits for past transactions. We'll come back to some element of this at a subsequent point, but I think largely we can rely upon these judgments to say that there is no retrospectivity of registration, and you cannot enforce disallowance on me because on the date of my transaction he was not registered. Again, a similar case wherein there are goods purchased in, say, December 23 and remain outstanding. There is definitely, if Section 15, etc., was applicable, there would have been a default. But the thing is that the person has not intimated the fact of registration, and we have already kind of received a consensus or a response on this, that if the person who is holding registration does not take efforts to seek benefit under law by communicating his facts, then he is, number one, he is not entitled to those things. The principle basically is law acts for those, law supports them who are vigilant about their rights, but not does not support who sleep over their rights. So if that fellow is sleeping over his rights, not taking action by intimating his registration, he cannot seek benefit under MSME Act. That's the principle which has been read down by various judgments in different contexts, but applicable very much here. So if he is not entitled to benefits under the MSME Act itself, where is the question of 43B dissonance happening? Because 43B dissonance is only an offshoot to support compliance with the MSME Act. Therefore, in my humble view, this kind of situation should not result into disallowance. Again, a very extreme case, but I'm told that it is happening in practice, in reality. Therefore, it is important that we deal with such situations also. So, there's a company who's procuring security services from a service provider, and there is, the payment is not made within the 45 days or whatever applicable time limit of Section 15, and the service provider is registered under the MSME Act as a micro or small enterprise, but still gives a confirmation that he is not registered. At a later point of time, the assessing officer somehow finds out that this is a small or micro enterprise. Whether assessing officer can enforce disallowance rightfully against me? Yeah, I know there'll be answers largely in one side or maybe some answers on the other side. If somebody can also share thoughts on what is the reasoning behind the answer, it will be helpful in a discussion more. Do we see any risk coming out of this? Do we see that by this kind of means, see, it can happen, what I'm told, but what I'm told is that see, it is not ignorance of law. That person is registered, he's consciously saying I'm not registered. So it's a case where he's making a actually false assertion. Do we see any risk in this?
Vasanta ji says can be used as a loophole under the law.
See, let us be clear about the facts of the case. Facts of the case are that person is actually registered as a small enterprise, but despite being registered, because he is registered, he knows that I'm registered. That fact is known to him, and he still writes a written confirmation because somewhere there is a belief that I will not be able to do business if I don't support my customer. I have to facilitate my customer. I should not suffer disallowance. Therefore, he shakes hand with the customer, says, gives a written confirmation that I'm not registered.
Communication saying that seller is not registered is good evidence before tax authorities.
So as a recipient, as a buyer, at least my skin is largely safe, what I believe. But is there a risk for the person who is giving this kind of a? And if I can ask a pointed question, can he be held liable to prosecution under the default of abetment to defraud revenue? He's trying to kind of assist his customer in preventing disallowance, and thereby his customer is actually defrauding revenue, and this man is causing a better to that. So it's a very very serious thing. People may want to really casually treat it and say, okay, how does it matter, let me give this small confirmation, doesn't matter. But I think it should be taken very very seriously. Yes, IPC etc has to be evaluated. There this thing. uh, there is some statement there is no loss to revenue. I'm not too sure. Yes, you may say it's a timing difference, not a big thing, but yes, timing difference is an important thing. There is the whether the real rigor of the law will apply in this case may be subjective, but I think it's too risky to take chances on these kind of things. Not a very good thought to indulge into such practices. Moving on to another situation. It's a case. Deepak, we can move on, or there is anything you think we need to address here?
I'm noting whatever is left out.
Fair enough, fair enough. So, taking another illustration where this company, say, buys some goods and garments from a manufacturer and sells it to a retailer. So, wholesaler buying from manufacturer and selling it to retailer. The retailer fails to pay to wholesaler, who in turn fails to pay to manufacturer. So, there's a total chain of failure of payment, and the ultimate manufacturer is a micro small enterprise. The thing is, from a wholesaler angle, there could be a problem, but is there angle from a trader's angle, retailer's angle? We have already seen that purchasing from a trader will not result into disallowance, because a trader is not ideally a micro small enterprise. There was some difficulty in this illustration. uh, we should spend 1 or 2 minutes in understanding where is the problem, Of course, then answer I think probably we can find a little more easily. The challenge here is if you go by section 15 of the MSME Act, it says that where any supplier supplies goods, then the buyer shall make payment within so and so dates. And the supplier is defined in an inclusive manner. The supplier means not only a micro or small enterprise, but also any other company which is engaged in selling goods produced by micro or small enterprise. So, by this inclusive definition, the distributor who is in between becomes a company or etc., which is engaged in selling goods produced by manufacturer who is a smaller micro enterprise. So thereby it becomes supplier and gets governed by section 15 of the MSME Act, and section 15 therefore gets incorporated in section 43B, and thereby causing us a cause of concern that because now section 15 gets applicable in this transaction, do we need to make a disallowance in the hands of retailer also? So, in the light of this scheme of provisions, expanding the scope of Section 15, do we really still continue to believe that disallowance will not operate? And if you believe disallowance will not operate, let us have a clarity on why is the reason. What is the reason? No, it's not only a company, sir. Srikanta, sir. Other entities are also mentioned in the Section 50, the definition of supplier. So what it really covers is company, corporate society, trust, or a body. Now this word body is too wide. What at all it will cover is a very very vague. Assume it covers any body means any group of persons, incorporated, unincorporated. So by that meaning of word body, it will cover any entity. Probably not an individual, but any group of persons. So I'll not take too much time on this. Just coming back to quickly, an element which is of importance is the section 43B. If you take a look at, maybe we'll have to go few slides earlier, but what it really matters is section 43B. Yeah, it's here. 43B says any sum payable to micro or small enterprise. So our scope is only to see the entity is a micro or small. Our scope is not to see whether he's supplier or not. No, the fact that our section 43B in turn refers to section 15 of the MSME Act, and section 15 refers to word supplier, and supplier is very broad. So the point is reference to section 15 here does not bring entirety of section 15 here. The reference to section 15 of the MSME Act is for the limited purpose of computing time limit. The entity of my focus continues to remain a micro entity or a small enterprise. Micro enterprise, small enterprise. The scope of this does not expand to cover supplier. The word used in 15 is supplier, but the section 15 which uses the word supplier does not get fully incorporated in section 43B, and 43B refers to section 15 for the limited purpose of calculating time limit. So that is how we can come out of this potent problem, which definitely at some point of time may raise its head, that this extended application of section 15 and 43B. So I think in my humble view that's the answer, that 43B allowance will not operate. For the reason is this. Now, very common and very basic element, whether when I am purchasing a goods, say for example for 1 lakh, and there is a GST of 18,000 on that, I am taking input credit of GST. My actual expense is only 1 lakh. If I am not complying with 43BH, whether the disallowance will be of 1 lakh or 1 lakh 18,000.
There are divergent views. Some are of the view that it is 1 lakh, that is the amount debited to PNL. There are a lot of supporters for 1 lakh 18,000 as well. But most of them are with the answer as 1 lakh because
1 lakh.
that is what is debited to PNL
See,
is the ratio.
very honestly, I had been really struggling to understand this. I have, I don't have a clear answer. Okay, but what is prima facie appealing to me is there are we have to go by the scheme of the law. There is a section called 145A. It says you don't see here, don't see there. You follow inclusive method. So you have to compute income as if your taxes are included in your purchases, sales, etc. Which essentially means that even though I am not accounting for this 18,000 as my cost, I am treating it as a separate item in the directly routing through balance sheet. The essence of 145A requires me to treat it as a gross amount, and therefore, in the eyes of law, I am claiming deduction of 1 lakh 18,000. Then I'll have to offer 1 lakh 18,000 as disallowance. That's the very literal reading which comes out. Somewhere it is not sinking through my throat. Also, my heart says it is 1 lakh. My mind says 1 lakh 18,000. I am also in a conflicting situation. Anybody want to throw better light on this? I think Deepak ji have very strong views on this. You want to say something on this, Deepak ji?
Sir, I always believe that the disallowance will be of 1 lakh 18,000, sir, because
Like
law mandates inclusive system. We may be
inclusive.
following exclusive system for all practical purposes. Our balance
Yeah.
sheets, the P&L account that we draw are under exclusive system. But then because the mandate of 145A is inclusive system, and this is something that we've been giving effect to for other dues also. So let's say there is a GST due, which is falling under clause A of 43B. I make a disallowance if I don't make the payment before 30th September or 30th October, whatever my 139 due date is. So applying the same logic, I believe it should be 1 lakh 18,000 only.
I I have good amount of acceptance of that proposition. So I also strongly believe it is 1 lakh 18,000 only. But there is some internal reconciliation I need to do. But probably I think for the time being we can take it to be 1 lakh 18,000. And a lot of my professional brothers and sisters who are there in the discussion today, who believe it is 1 lakh, I just request them to be a little more careful about it, articulate your thoughts very clearly. How it is 1 lakh? How do we say that 145 is not having applicability there? I just stop there and then I'll leave it for the audience to take their conscious decision on that. Now, a very common problem which you may face in this kind of a situation is there is a section. The section says when is that I am supposed to pay. It says I have to pay within 15 days of the appointed date, and that is from the date of acceptance of goods or services. Now, services have been rendered to me, but the invoice has not come, and I have a practice that I will pay only once invoice comes. So my supplier does not given me invoice. Can I say that my time limit starts from the date I get the invoice? My 15 days will start running from the date of invoice, or I am supposed to pay within 15 days of when the services have been rendered to me? That's the question. Any person, any colleague who believes that date of receipt of invoice should be relevant. Between delivery and date of receipt will be deemed as correct. Section does not talk about invoice. Yeah, one very interesting proposition is that from the invoice only I will get to know the status of the supplier, provided it's the first invoice. But in subsequent invoices, I know his status already. So I'll just share my thoughts, and what I'm going to say is not certainly the most accurate thing. In my personal humble view, see, if the industry practice, or if the practice of the trade is to wait for the invoice, and so even the seller understands, or the supplier understands, the service provider understands that until unless I raise my invoice about exactly what I have done during this period, there may be two kind of fact patterns. Maybe there is a standard rate agreed. It's a monthly some service, and it's say 2 lakh per month. It's a standard. There is no possibility of it going upside or downside. Then the buyer also knows that this is the invoice going to come. Why do I need to wait for it? I can make payment once the service is complete. I know the terminal points. I know the quantum. That can be one fact pattern. There can be another fact pattern where there can be ups and downs. I do not know the exact amount unless my service provider provides me. Of course, I will have checks and balances to ensure that he's not overbilling me. But still, I need to wait for his advice. He may want to give me some discount, or there is some deficiency in service. I've spoken to him. He says, "Okay, I will consider that." There can be a number of things, and there can be a trade practice that only once invoice is raised, my obligation to payment starts. And considering what is the real intent and scope of this law, does the law, MSME law, seeks to address as to how you should transact? Does it seek to really address as to how the terms and conditions between the parties should be? Though in some sense it tries to do so, but what's the prime objective of the law is to make sure that these entities, the micro and small entities, are not squeezed or not manipulated by the larger entrepreneurs. It is not supposed to change the trade practices, but to ensure that the trade practices do not result into malpractices. And if the established trade practices to start from the date of invoice, I think it makes good sense to treat the date of invoice to be the date of acceptance services. It does not really gel with the language of the section, but that's a practical view. Okay, and if I take recourse to some of the provisions in different laws, in income tax law also we have, suppose an appeal has to be filed within 2 months from the date of the order. For example, your section 254(2), for rectification, it is governed from X number of months from the date of the order. The question arises is, order is dated 24th April, but I received it on 3rd of May. Will my time start from 24th April, which is the date of the order, or my time for filing rectification runs from 3rd of May when I actually received it? And the courts have consistently held, and different laws in Supreme Court judgments are there, that when I have to take an action on something, unless I get the document, I am not in a position to take a proper action on that. It may not fit in the fact pattern here exactly, but there's good room to think that the starting point should be a tangible, concrete thing, and there should be something with me where I can act upon. So, not very clear, but yes, I would want to canvass the proposition that yes, my payment term starts from this, not as a matter of planning your points, the planning your position. But if at all you're caught in a situation where disallowance is being proposed, maybe you can experiment with this proposition and say, no, no, I received the invoice late, please count it from that I have made payment within the time. So as a defense mechanism, probably we can fall back on this. No, again, there could be a situation where the taxpayer is, availing benefit under any particular presumptive taxation scheme. For example, this 44 AD is offering his income to tax at a particular rate of income provided by the statute. Is a disallowance like a 43B disallowance? Does it operate in cases where income is offered under a presumptive scheme? That's the uh, question we are examining here. And here again, as we have seen, the audience has got multiple thought processes, different views are there. In one judgment, this Goodrick Kinetic Honorable Panaji Tribunal said that 43B will operate even in a 44 AD kind of a situation. They examined both the sections, that both are non-obstante. 44 AD says, I don't care what is written in section 28 to 43C. 43B says, I don't care what is written in the rest of the act. So both are kind of non-obstante clauses. Overriding has the effect of overriding each other. But then by looking into the scheme of the things, what they felt is that 43B has got a wider mandate and it should apply even in a 44 AD kind of a situation. But on the very contrary, there is judgment of Raipur tribunal which says no, no, no. This 43B presupposes that there is a claim for deduction. As we read in the section itself in the beginning, it says a sum otherwise allowable, an expenditure otherwise allowable. To say that 44 AD, when you compute income as per presumptive basis, you are not claiming any expenses. What you are doing is basically the gross receipts multiplied by income percentage, and there comes your taxable income. That's the end of the story. There is no expense being claimed. That's the kind of thought process they seem to have. But there is, interestingly, in 4480, there is subsection 2, which says that all deductions from section 30 to 38 are deemed to have been allowed. So when there is a deemed claim of the deductions, then the disallowance should ideally operate, and that is what has been held in these two judgments, not exactly on 4480 kind of a situation, but wherever there is a determination of income by applying an ad hoc rate of income, they say the disallowances can operate, may not necessarily be a 43B case, maybe a 41 case. I believe fundamentally there is very less chance of succeeding in these kind of cases. You have to be cautious. Of course, if you are in a trouble, you can try relying upon this judgment of Krishna Kumar, which is Raipur Tribunal. Being cautious that the fight may not really result into a very favorable outcome, you can try and experiment with that. Another interesting element which may be useful in some cases is if there is an ongoing running ledger. So there is an opening balance, there is further supply of service, in between there is a payment and there is a closing balance. Do we say that this payment made in between is against the opening balance or the during the year consultancy? So how do we compute the disallowance? Can we attribute the payment to a particular bill or a particular outstanding? What's the law governing this? How do we treat this? How do we compute our payment versus services time period in this? Considering that the professional colleagues would have many more things to deliberate on, I'll just quickly run through the relevant scheme of law in this context. Is the contract law, Indian Contract Act provides for how to account for receipts and payments. It primarily gives right to the payer of the money. He can tell that I have, he can tell to his creditor that I have so and so amounts due due to you. This payment I am making is particular against a particular outstanding. So the first right is the payer. If the payer does not exercise his right, then the recipient can exercise his right and allocate the receipt against a particular due he has receivable as. And if both of them do not exercise any right in a particular manner by communicating to each other, then if the matter is to be decided by courts, they will apply the first in first out method. So they will adjust any receipt against the oldest outstanding amount. So therefore, the mechanics of this will work accordingly. An important or interesting situation could be where what you are purchasing is not a revenue expenditure but a capitalizable item, and there is a evident breach of section 43B. uh, you're capitalizing that purchased item and claiming depreciation on that. Whether depreciation can be hit by this provision of 43B, whether the ultimate objective of ensuring and helping MSME will extend to the extent that the disallowance of capital items in the form of depreciation can also operate, or will this kind of a transaction will be immune from 43B? So I think here again, I think we have largely a consensus that there will be no disallowance, and this is supported by a judgment of our Honorable Karnataka High Court, which says that what is to be disallowed is the amount payable. Depreciation is not the amount payable. Amount payable was the capital sum, which I am not claiming deduction at all. So disallowance of depreciation is outside the scope of 43B. Now I'm taking a case of a loan given by a micro or small enterprise. A very connected point is, while we will deal with the how this section will operate in the case of loan, but the larger question embedded in this is, in the case of a continuing service or a continuous supply of services as is it not the context of GST law, when does my obligation to pay really arise? Now suppose I start rendering service today. I have to render a construction service. It's going to be there for 6 months. My section says that section 15 says the appointed date is 1 plus 15 from the date of acceptance of service, or delivery, sorry, rendition of service, from the date of delivery of goods or rendition of service. So when can I say that this service has been rendered? Service is being rendered from day 1 to day 90 on a continuous basis. Is the starting day the date of rendition of service? Is the terminal point the date of rendition of service? Or some other way, how do we really compute this thing? With this larger question in mind, we just try to deal with this loan situation. Keeping this larger question at the back of mind, 2 minutes will just divert to this case study. So the question here, first question is borrowing or lending itself is a service? There, though not a very clear answer from anywhere, if we see the historical developments of service tax law and GST law, kind of suggests that lending or borrowing is a service. So for a moment, we accept that this is a service. So how would the section operate? As I said, on the date of sanction of the loan is the date of services rendered, or the date when the money is actually given, that is the date when the service is rendered, or when the loan terminates, the point comes to an end, everything is being repaid. That is the date of lending service. I need sum of money for next 6 months. You're lending me money. So until the 6 months are over, my service is not complete. I need it for 6 months. So can I say that only on the terminal part of the service rendered? So how do we deal with the this thing in a continuous service situation? Now, for a moment, parking this at the back of our mind, take an illustration where a loan of rupees 10 lakhs is given at a interest rate of whatever percentage on 1st January, and loan period is for 3 months and repayable with interest on 31st March. Now, for a moment, let's assume that we are not hit by that 45 days or 15 days threshold. If the interest is paid on 31st March, prima facie, there should not be any disallowance. However, if we apply that, no, I should have, I should calculate the 45 days from 1st January, and they end somewhere between mid of March or April, Jan, Feb, what it is. Somewhere in the first week of March, it is getting over, and I have crossed that time limit. Even then, if I make the payment within the financial year, I'm still within the scope of claiming my deduction. I do not suffer any disallowance so far as I make the payment on 31st March. But taking a slightly different fact pattern, if there is a loan which is lent on 1st January, it's loan for 1 year, and the payment is quarterly payment, which is due on every fifth of the after the end of the quarter. So for the Jan, Feb, March, the interest is due on 5th of April. Can I make payment by 5th of April and be still out of the disallowance? Or will I be told that no, you should see maximum 45 days from the date of actual lending, which is 1st January. And if you're not making payment within that, there will be disallowance. So, how do you really deal with this kind of situation? What is the thought process? I may want to hear from the August audience on continuous surveys, or this loan example is nothing different as to how do we really compute this. So, one of the observation given is the agreed milestone is the relevant thing. Terms of contract matters, right? So what we have so far been kind of understanding is that your section 15, your section 15 cannot be taken away by contract. Your contract has no value in front of these sections. These sections will operate on their own scheme. But here is a case where this section is incapable of being applied in true sense, because the section does not tell us as to how to really deal with this situation. And then coming up with the principle of interpretation of purposive interpretation at, and trying to find out what is the real purpose of this MSME law. As I said earlier also, and I think all of you are also equally clear, that the whole purpose of this MSME law is to make sure that the payments due to these small enterprises are not stretched beyond a time. It is to ensure timely payment. That's the prime objective. And what can be timely payment? The first and foremost uh, parameter for that is the parties can themselves tell what is the payment terms most acceptable to them. The law can only tweak that. The law what is saying is you first go by agreed terms. If you then it is trying to tweak the agreed terms to say it cannot be more than 45 days. But then, if you are unable to apply that 45 days criteria or 15 days criteria because the law does not give you any kind of visibility as to what is the starting point and terminal point, those clauses, in my humble view, become inapplicable. So, what really stands is payment terms as agreed. So, considering that if you are making payment of interest within the agreed payment due date, then the dissolution should not happen. And so much so, if the parties agree that I should be paid interest on a 6 monthly basis or an annual basis, then I think that can also not result into any kind of dissolution on that front, because law, unless law clearly specifies how to compute these things, there is no possibility of applying the rest of the two clauses. Now, taking a very connected point here, suppose there is a interest provision being created in the books of accounts as on 31st March. The due date is somewhere in the mid of next year. This is just a provision because my accrual system wants me to create a provision. We have already concluded that this will not be governed by 43B disallowance because due date has not yet come. So can we say that this 30,000 be claimed in the year of accrual itself? I believe yes. And in the next year, if we go, what will be claimed is total interest due on during that year minus 30,000, which has already been accrued. Rest of it only will be debited to P&L account. And if at all there is a disallowance, the disallowance would be able to be operated upon only on the remaining quantum of interest, because that's the interest being claimed in that year. And the beauty is what has been claimed on the provision basis remains outside the scope of disallowance. That's a small thing I wanted to bring home as a point. With this, two things are getting over. One, my presentation is getting over. Secondly, is the time limit of 6:30 is getting over. But I'm happy to deal with some of the issues the respected audience may have.
So there are a bunch of queries and interesting comments. I'll just read them out, and if you can comment or resolve those queries. There's one query on the requirement of written agreement. So the query is, can you elaborate on the requirement of written agreement? Is a separate contract required for availing extended credit period? The date mentioned in the invoice that the credit period is 30 days. Will this be counted as a written agreement?
Beautiful. I had this in my mind, but in the scheme of flow, I forgot to deal with that. So what the section 15 of the MSME Act says is that I will first see what is your written agreement. If there is no written agreement, then 45 days from the date of acceptance is the time limit available. The law does not say that you have a written agreement. There is no mandate. Law only says if you have, this is the time limit. If you don't have, this is the time limit. Now, coming to whether a mention in the invoice will constitute an agreement, there I am reminded of one judgment we read in our commerce graduation days. Okay, in the contract law, I'll just narrate that quickly. The There's a person who enters into a hotel. He takes a hotel room on for staying in a for rent for 2 3 days, and he makes the payment at the counter and he steps into the room. And when he steps in the room, there are terms and conditions written there. So the question was whether those terms and conditions are binding on this fellow, because he has already made the payment. The contract is already over for taking rent and all, and these terms and conditions are being introduced later on. So whether they are binding, because they are not being introduced at the time where you are entering into the contract of rental. So taking a clue from there, when the parties have agreed to buy and sell, at that time there is no communication. The later communication through invoice will not tantamount to agreement between the two entities. Having said that, if that invoice is acted upon and payment is made within 30 days, then the next invoice will be on the presumption that the recipient or the buyer has agreed that term, and the second and subsequent invoices may constitute an agreement.
Sir, on the very first invoice, upon the delivery of goods, let's say I
Hmm.
make an acknowledgement on the face of the invoice
Hmm.
as a token of acknowledgement for having received the goods.
Hmm.
Would
Yes.
that tantamount to any kind of a written agreement?
I would say no, because agreement, you have already agreed to buy and sell. That is your agreement. You are already fulfilling the agreement by supplying the goods. At that point of time, further introduction of any terms will not be binding on the other party.
Okay, so my initial agreement to buy was an
Yes,
oral understanding,
that's
and the
okay.
only document between us is the invoice.
That's okay. That's a difficult question of establishing what is the agreement.
Okay. Or can I make a stand to say that what was orally agreed is now reduced in writing, and
Hmm.
therefore I should get the extended time limit of 45 days?
The challenge will be in establishing that oral agreement did not contain any payment terms. That will be practical challenge.
Let's
But
say it
if
did contain the payment terms, and now we are
sorry,
reducing it to writing.
sorry, come again, come again.
Let's say that the terms of agreement, the terms of payment were also agreed orally, and now at the time of
No,
supplying,
no,
it is being brought
then
on
there
to
is no surprise element. The problem is only when there was nothing agreed upon initially, but the invoice is giving a surprise element for the first time, stating what's the payment term. That's only where the problem starts. Otherwise, there is no problem at all. Otherwise, there is an agreement.
Okay. Then there's a query on the MSME certificate. What if
Hmm.
the seller has obtained the MSME certificate by misrepresentation? Say he is a trader, but he's wrongly procured a MSME certificate claiming to be a manufacturer.
Very good. So I had initially posed a question: is the certificate sacrosanct? Can I challenge the certificate? If I have to challenge the certificate, do I need to go to the MSME authorities? I can challenge the certificate before the income tax authorities directly, that you don't make me disallowance. I am not concerned whether that person avails other benefits or not. I should not suffer disallowance. Okay, so coming back to the query, whether the person has wrongly availed the certificate, what will happen to him under MSME law? I'm not going to touch upon that. But as far as the payer is concerned, if he has any means to demonstrate that the certificate is wrong, then definitely he is not bound by that. Two things in this. One, the law, income tax law, nowhere says that a certificate is a conclusive evidence of the person being a micro or small enterprise. You will find in multiple legislations some statement like that, so and so document, so and so thing will be a conclusive evidence of this and this thing. So unless that kind of a language is employed, the certificate does not constitute a conclusive evidence of being a micro small enterprise. Therefore, it's subject to challenge. If you can demonstrate by looking into his balance sheet financials, which are publicly available, that he is not a manufacturer, he's a trader, fair enough. Officer, the tax department is bound by that. They cannot question that. They have to accept that. They cannot simply say there is a certificate. That's one side of the story. Now, second connected element is, do you need to go to the MSME authorities to get it quashed? I don't think that's a requirement. It is enough to demonstrate before the tax authorities.
Right, sir. Then there is another question with regard to objection on acceptance of goods. If we mention in the PO that the acceptance of goods is subject to passing of goods in the quality control testing by the QC lab,
Yes.
whether the date of delivery will be
Hmm.
pushed to the date of quality control test by the quality control lab.
Hmm. Hmm. I really do not have a clear answer. Okay. The reason is, on one way, we have the language of the section which says you have to be governed by the delivery. If we simply go by the statute, I'll try to share my thoughts on this. But what I want to say is that you have to take it a pinch of salt. Just trying to present the relevant.
I think
Yeah.
it went.
So acceptance, I think acceptance also defined somewhere, no?
Couple of slides from here, sir.
Couple of slides below that. No?
You have to move forward, sir.
Acceptance. So acceptance is delivery, actual delivery. Okay. So there is one thing I want to say here. When they say acceptance is delivery, there is a judgment of Honorable Supreme Court in the not remembering the name, Hari Shankar something. Uh, Not getting the name exactly. I'll just maybe post it later on, which says that when something is being defined, first you see what is the natural meaning of the word, and then if the definition deviates from that and does not permit the natural meaning, only then natural meaning will be out. Hari Prasad Shiv Shankar Shukla. Hari Prasad Shiv Shankar Shukla, if I remember it correctly, it's a five-judge bench of Supreme Court. In the case of Industrial Disputes Act, definition of retrenchment. Okay, they say what is being defined is acceptance. If you apply the principle here, what is being defined is acceptance. Okay, so first you get the natural meaning of the word acceptance. Natural meaning of the acceptance is when I agree that yes, what I wanted to receive has been received. That's the acceptance. So if my terms and conditions clearly say that I will accept only quality control is met, then that is the natural meaning of acceptance. And then the delivery word reference in the definition section, unless it is not permitting me to take this meaning, I will still be entitled to take this meaning. In other words, there is no there is no rigidity in the section, I believe, which disables me from taking this interpretation. Therefore, I would still believe that if I show my quality compliance, quality testing, which has been done within reasonable time, not that I'm taking my 6 months sweet will to do the quality control, I am doing in the normal course within a reasonable time, I can definitely defer the date of acceptance by those couple of days or whatever.
What would be the date of delivery in cases of sales made on approval basis?
Same proposition.
Sale on approval basis.
Yes, same thing. What I'm saying is sale on approval is what? You're sending me goods. I have to first approve it. Whether approval is because of quality control or some other parameter.
Noted, sir.
Correct.
Uh, is there any site to check whether the vendor is registered under MSME or not?
I think you are in a better position to answer that, Deepak.
There is this MSME site which allows you to verify based on MSME registration number. So if there is a MSME registration number, you can go. and put it in the website to know the current status, whether he's a micro or a macro or a trader or a service provider. That facility is there only if you have the MSME registration number of the supplier.
But as I've been saying, there is no independent obligation for me to find out. First obligation is on the supplier himself, because law is for his favor. He should tell me by writing on his invoice that he's registered. And then he's giving me registration number. I can go through this website and just make sure that he's just saying that he's registered or is really registered.
So there's an interesting question which has just come up. What happens to retention money? Will it also suffer disallowance under 43B?
Unfortunately, yes. In my humble view, this it may be a trade practice to retain some portion of the money, but this act doesn't really give you a leeway on that.
So this is an interesting question, sir. I'll just summarize the query. It's a little lengthy query. So
Hmm.
let's say I have bought goods on 1st Jan. I've bought a
Hmm.
supply of service on 1st of Jan. My due date for payment is 15th Jan.
Hmm.
I make the payment on 15th Jan, but
Hmm.
then the TDS element of it, I pay
Hmm.
on 7th Feb.
Hmm.
Now, have I breached the timelines of Section 15?
That's a see when you if you're making payment on 15 Jan, TDS you will give only on by 7th only, no? That's within time,
Within time, the TDS is paid within time limits of Income Tax Act. But when I strictly
right?
look at MSME law,
Uh,
the requirement for me to pay the invoice was 15th Jan.
that I have
But of
done.
course, okay,
See, MSME Act cannot be read to prepone my TDS obligation.
noted, sir. So as long as the net of taxes, whatever is the sum payable to the vendor, if that is paid on time, it is
Correct.
good enough compliance
Because
with the
my
law.
obligation towards my supplier is only net of TDS, having regard to the rest of the laws.
There is one very interesting comment, sir.
Hmm.
So there is a date of delivery on 20th March, and the
Date of delivery
contract is 20th
20th
March.
20 March.
Yeah, and the contractual obligation to pay is on 20th April 2024.
Okay.
So Mr. Chandrasekhar is of the viewpoint that
Hmm.
standing 31st March,
Hmm.
there is no sum payable and therefore there should be no disallowance under 43B. The sum is payable only on 20th of April.
Correct. I totally agree with that, because if you see section 43B, it says there has to be a payable. Okay, so the if the payable, there may be an obligation to pay at a later point of time, but it does not become payable on that date.
Okay.
I would tend to agree with him unless you have a somebody else has a different thought process on that. And more importantly, that section 43B has got an explanation defining what is payable. And there, what it says is for the purpose of clause A, which deals with taxes, duty, cess, or fee, the payable will include what has been incurred as per method of accounting. So then artificial extension of the meaning of the word payable only for the purpose of taxes payable, that even if you account for as an accrual base or something as an obligation, that will also constitute payable. It will not extend to rest of the clauses. Clearly supporting the proposition that for the clause H you cannot have this as a payable.
There is a comment here which says, is this provision justified? Let's take a case of purchase 50 lakhs where goods are sold at 51 lakh and the profit is only 1 lakh.
Hmm.
Now, if the payment is not made within 45 days, the income will become 51 lakhs. The
Hmm.
trader or the assessee would need 8 years to cover this. So he's going to get the 45 lakh as deduction in the subsequent year, but then he'll need 8 years to cover up that loss.
Hmm. So
Slightly query on the emotional side.
see, you take TDS disallowance, you take other disallowances like that on the same footing. I don't find this gravity of this is higher than those things. It may be harsh, but I'm not a constitutional law expert to suggest that whether you can challenge the validity of that. Prima facie doesn't look like that.
we've exceeded our time, but if you may permit, I'll take up this one final question.
Hmm.
Uh, where did it go? So the question read: if the payment is made by way of check on 31st March, but
Hmm.
the bank balance was not sufficient to cover the check, the value of the check, would 43BH disallowance still be triggered here?
Hmm. See, I want to give a favorable answer here. Okay. So take a case on 30th, 31st March, I'm giving the check of 5 lakhs and my balance in the account is only 3 lakhs. So it's falling short by 2 lakhs. It cannot get uh, honored. On 2nd April, the money is credited to the account, sufficient balance is there, and on 3rd April, the check is cleared. I know that if I give on 3rd, then that person takes at least 3 4 days to either the check will take time to get uh, uh, the supplier has told me you can give check by post. I know postal will take 4 days. Within 4 days I'll get money, and therefore I'm taking this chance. And I know that when the supplier says you can give by post, the postal authorities or the courier authorities become his agent, so my delivery of check is equivalent to payment. It is getting honored also within a short duration. Probably in a very very narrow circumstances you can still claim the advantage, but what you're trying to achieve in a larger scale may not be possible.
As long as the check clears, should not be a trouble. Is what we're trying to conclude. And
If it is too
not
wide a
scheduled.
gap,
Yeah. If a manufacturer gets registered under MSME and subsequently surrenders his registration, will 43BH be applicable to the past transactions which were undertaken prior to his surrendering the registration?
I'm not too sure on this. To the best of my knowledge, taking registration is a prospective thing, and surrendering registration is also prospective thing. Past transitions continue to be governed as they were, unless there is some uh, action by the authorities which have whereby they have found that you have wrongly taken a registration. Then cancellation probably can be retrospective, but in this kind of a normal case, I think it will be prospective only.
There is another query which is going around in the WhatsApp group, sir. So, what if I change my status from manufacturer to trader? I in the sense I'm a supplier. I change my status from manufacturer to trader. Then would 43 be still be triggered in your hands who are buying goods from me?
So, from the date you change, that date onwards, it will cease to operate. So, transactions taken after the date of change are immune from the problem.
But it is seen from the registration certificates that are obtained after the change. The date of change is nowhere visible on the certificate. So if a manufacturer changes his status to trader and downloads a certificate, from the
Mm-hmm.
face of the certificate, it so appears that he was a trader from day one.
No, so the thing is, has he ever communicated to you earlier that he was manufacturer? If he has never communicated to you, you can conveniently say, I never knew. But he was communicated to you that his manufacturing status, then you are bound by that till the time he gives you a modified certificate.
Okay. We continue to keep getting questions, sir, but I think we have exceeded our time. Uh, with your permission, we'll conclude this session, and I'll request the participants to post these queries in the WhatsApp group. We'll try to collate these and get back to you as and when possible from our end. Now, at my end, I take this opportunity to extend a formal vote of thanks to our speaker. So we had a enriching and session which gave us with a lot of practical illustrations and solutions. On behalf of entire team KAC and all the attendees, sir, we thank you very much for the detailed and insightful discussion. Thank you for having consented for our program and having devoted your time.
Thank you. It's been my pleasure. Thank you so much to KC and to you, Deepagi, for having me here.
And we also thank all the attendees for their participation. Thank you all. The session stands concluded. Thank you.
Thank you.